So welcome to Crayfish's weekly webinar series, which are designed to be light, short, and helpful in terms of practical takeaways for your business. So my name is Ting Zhang. I'm the founder and CEO of Crayfish.io. I'm also involved in a number of other volunteer roles to promote UK-China trade and better understanding of China in the UK. So for those who are new to Crayfish, we provide SMEs quality services for cross-border business delivered in an affordable way, made possible because of our proprietary digital technology. So clients enjoy direct access to experts without paying higher fees at boutique advisory rates. So our services cover a wide range from digital marketing to sourcing to recruiting staff, every services that you need to help your business to come across the challenge, overcome the challenges associated with cross-border trading. So I'll probably explain a little bit later how our services can help you when you actually develop your business with China. There are various ways that we can do that, either through our online digital platform and also through a more bespoke and tailored approach. So without further ado, I would like to introduce you our guest speaker for today, Benjamin Schmittzehe. Ben, please do wave your hand. And so I've known Ben since 2004, 2005. So it's a long time we've been collaborating, working together on Chinese project side. But Ben himself is over 25 years experience, out of which 15 years are in consulting. And since 1991, he's worked in Asia, in China. And prior to consulting, Ben worked in corporate development and general management roles for Microsoft and the Swire Group. And Ben was the first non-Chinese representative for the Swire Group in China in the group's whole history of 152 years. And Ben lived in China and Asia, many countries in Asia, and speaks Chinese and many other languages, as you can see. So with that, I think I'm going to stop screen share so that we can actually have a discussion for today. So Ben, first, welcome.
Thank you, Ting.
Yeah, so I think today the topic is really about lessons learned in doing business in China. I think in our audience, some of them are very experienced already, have done various projects or, probably have various ventures in China, but some of others are very new to China, while a few others may be just looking at whether they should look at China. So first, I would like to sort of ask you, Ben, in your experience and in all these years you work with clients, how do you define commercial success in China?
Well, I think there's two ways to look at it. From a very simplistic perspective, to be honest, I think China should not be treated differently from any other market. Ultimately, as a business, we're trying to achieve certain business objectives, be it a certain level of profitability, a certain level of turnover, return on investment, etc. So I think it's just exactly the same. We're trying to meet the same financial objectives. However, in terms of trying to set the target, as well as figuring out how to achieve that particular target, I think that's where there are some particularities about the Chinese market. Shall I just develop that a little bit further?
Yes. Particularly, I think some of the companies could have been successful in China, like for a short period, but it's much more challenging for them to be sustaining that success. Right. I think that is the real challenging part, isn't it?
Absolutely. So, in terms of so in terms of the two different parameters I was trying to describe, the first one is in terms of setting targets. Often companies get a little bit carried away by just the size and therefore, in theory, opportunity for the Chinese market. And indeed, it is indeed a huge market and therefore a potentially a massive opportunity. But of course, the challenge is it's also a huge market for everybody else, including lots of very capable Chinese companies. So it's a very, very competitive market as well. So the first thing, of course, is to set realistic targets with a realistic time frame. In other words, although things develop very fast in China, it does take time to achieve that. And then the second thing is in terms of trying to get there, there's a big difference that we find between the traditional strategy setting, which has been taught at business schools initially in the US and now worldwide, and the way in which many Chinese companies approach it. The Western companies will have a linear strategic approach. In other words, my objective in 3 or 5 years' time is X. That's where I want to get to. And I'm going to go and have a direct route to get there. And I'm just going to keep pushing on that strategy every year until I get there. And that works in more developed markets, but in less developed markets and markets where there's less certainty, the challenge is that as you start on that linear trajectory, either the situation within the market may change, the competitive dynamic may change, or there may be some externalities that may influence you. And so Chinese companies that are much more used to operating in a market where there is less certainty will take more of a, sometimes people call it a fog of war or an options strategy. In other words, instead of having one linear strategy, it's about developing a number of options. So I have maybe 5 different options, which are generally getting me in the direction I'm trying to get into, but I'm investing a little bit in each of those options, and I'm reevaluating each of those options over time and saying, well, these ones are working well, these ones are not working so well, so let's get rid of the ones that aren't working well, focus on the ones that do work, and then develop some more options. And so it's a little bit like feeling your way in the dark as opposed to going straight to your point. And so it allows you to take perhaps a less linear route, but makes a lot more sense in a market which has less certainty. So going back to your point, where initially I might be successful, then I run into obstacles. That's the big difference between the way a Chinese company would approach it and a Western company. In the Chinese will have had a number of different options. And if I start to hit an obstacle, I'm then moving to plan B or C or D, and then working my way around those particular obstacles, as opposed to, right, well, I wasn't anticipating this. Now what do I do? Because I've still got this objective, but either the objective no longer makes sense or the strategy no longer does.
So for that, remain, sort of flexible with multiple options. I can see that it's probably easier for bigger companies, multinational, who have the resources to be able to allocate into those. For example, like, even for Chinese multinationals, Huawei, with these obstacles in the US market, particularly because of the access to semiconductor on the hardware side. Now there's, so turning into more a service company and software that focusing on the Harmony operation system. So that is a typical way to say, okay, obstacle, and now let's evaluate our option. But for SMEs, particular Western SMEs in China, do you think that is also feasible?
To be honest, I think it works. It makes even more sense. And the reason why is because I'm not suggesting significant investment in each of these. Essentially, what I'm talking about is a much more open-minded entrepreneurial approach. So arguably, actually, SMEs are much more suited to this approach, and it's much more in the blood. Because actually what I'm saying is you need to be entrepreneurial. You need to be opportunistic. You don't want to get too hung up with these long-term objectives and then just this fixed approach. And therefore, a lot of the approach, I think, to success in China is about learning, and it's about building relationships and building opportunities. So human relationships, developing relationships with certain companies and individuals that may not necessarily immediately meet my long-term objectives, but will create more opportunities for me, or building a relationship which does, but then swiveling in a different direction with that relationship so that I'm building up, accumulating knowledge of the market, relationships which are going to help me to get to where I want to. So I think it makes a lot of sense for SMEs. Same with distribution channels, same with developing capabilities in a market. It's about building assets, intellectual property assets, which can be leveraged in a number of different ways in the future, regardless of what happens.
That makes sense. So do you have like an example of that, or in generally, what do the winners do differently? An example of that?
Well, I'll give you a couple of examples. One is a medium-sized company, and one is two very large companies. So on the sort of smaller end, it's a company that produces a specific brand of skincare. It's very niche, but within their market, they're popular all over the world. And when they came to China, their question was, well, how do we get into this market? So initially they found a distributor that was selling into to retail pharmacies, etc. And then they discovered that actually there was a lot of goods that were being sold on Taobao, which is the Chinese equivalent of eBay, with their brand. And they were concerned initially it was a counterfeit, and through investigation discovered that actually it was grey imports. So essentially people were buying products in other parts of the world and then selling it into the Chinese market before they had themselves entered the market. And so a lot of companies would have said, well, how do we stop them? Because actually they're destroying our market, they're competing against us. But this particular company, after a bit of time, found, actually, why don't we twist on its head and say, let's go and find out who are the key wholesalers who are selling to the individual sellers on Taobao, and see if we can appoint them as our distributor. Let's actually, if we can't beat them, join them. And so we helped them to identify one of these wholesalers and worked with them, appointed them as a distributor. He understood the market very well. He was able to then essentially block his competitors who were competing against him against Taobao. And then he was the official distributor. Our customers' turnover doubled within 12 months as a result of doing that. So a very entrepreneurial, flexible approach, extremely effective, leveraging these amazing technology platforms that reach out to huge audiences in China with very limited financial investment. So that's at the SME end. At a larger end, but I think still a lot of learnings there. If you look at two retailers, if you look at B&Q, very well known in the UK, and IKEA, known all over the world, both of them entered China around the same time, right? So 98, 99. Direct competitors. And if you look at what happened to them, I think B&Q left or sold most, if not all, of their stake in their business to a Chinese partner in around 2014 and exited. And their Chinese partner essentially moved the business online and closed down most, if not all, of the stores. IKEA is very much still present in China, very successful. And whilst when B&Q left, they had about 39 stores around that time. IKEA only had about less than half, 14 stores. They're now at 30 or more, I think, and very successful. Now, their approach is in some ways very similar, but in some ways are very different. And this goes to another very important learning about success, frankly, in any market, but even more in China, which is this concept of global, right? Being global and being local at the same time. In other words, how do you leverage the same capabilities you have everywhere else for the Chinese market, whilst at the same time being able to adapt to the market? So an example of this in the IKEA versus B&Q case is that B&Q was super keen to overcome some of their initial challenges by really going full throttle on localization. So they moved from quite a few expats to a very, very localized team. The localized team quite understandably said, you know what, the way we're going to make this work is to run it like a Chinese business. And so we need a lot more local suppliers. We need a lot more local products for the local market. And so you ended up at a certain point where you had 15 stores in China with a vendor base of 1,800 vendors. Now, in contrast, if you look at how B&Q were operating in the UK, 360 stores, 600 vendors. So dramatically more vendors, far too many SKUs, far too complicated, and the costs were escalating because you lacked economies of scale. Now, if you look at IKEA, they were very, very strict in terms of, you know what, we're going to sell the same products. There were some adaptations for China, but fundamentally the same product range in China as everywhere else. But what we're going to do is we're going to recognize the fact that China is a very exciting market from a manufacturing perspective. So we're going to localize a lot of the manufacturing to China, and we're going to drive down our unit costs so that it becomes much more approachable to the Chinese consumer, and we're also going to benefit from that worldwide. And so they get the economies of scale, they benefit from having manufacturing closer to the Chinese retailer, and they're able to learn from some of the needs of the Chinese consumer in a way that it can then be applied to learnings in other parts of the world. And I think that's one of the key things. They've been able to stay true to their core values whilst adapting to the local market, whilst B&Q basically over-adapted and lost their whole competitive edge.
Yes, I think that's a really good point, that over-adaptation could be actually one of the failing reasons. I read about also there's a Norwegian cruise line, which localized their whole, onboard experience in the Chinese way. So everything's Chinese. So it's actually totally would turn out to be a disaster because the Chinese consumer, the customer going on to the cruise wanted to have a Western experience, and they
Right.
did not want to be like going to a Chinese place. So that
Yeah. Otherwise, what's your competitive advantage? Yeah. So
exactly, yeah.
localization is important, but you don't want to over localize. Standardization is valuable, but you don't want to go to the extent that you destroy your business. And so it's about figuring out which are the areas where you can and should adapt and localize, and which are the areas that you absolutely mustn't, and what is ultimately going to be your competitive advantage.
So on those, do you see any difference between the sort of B2B business model and the B2C brands? Because the one you talk about, like, B&Q and IKEA, these are all B2C. What about B2B?
Well, I mean, I think fundamentally, a lot of the things are exactly the same, right? So in terms of the approach, the strategy setting, the importance of maintaining one's competitive edge while some localization. So for example, in the B2B space, again, economies of scale, fundamental expertise and value add are super important. Elements which are particularly important in B2B, some of them are specific to B2B, some of them also apply to B2C. So for example, in the B2B space, one of the things which have proven to be very effective is value-added services. So a lot of B2B companies, when they come to the China market, an effective way to compete is not just to sell the product, but the pre-sales and after sales is extremely valued by customers. And often customers may actually be buying from a customer more because of that rather than the specifics of that product. Also, it allows a company perhaps not to have to compete too much on price because essentially they have a much more compelling offering. But actually, to be honest, in the consumer space, it's the same. So when a lot of consumer products were launched in China, one of the big challenges was, for example, if you set up call centers, underestimation of the level of inquiries. Chinese consumers are extremely demanding and expect a very high level of service. And that's, so actually B2B, B2C. Some of the other specific things perhaps to B2B, the first one is, of course, that there is much more of a risk around corruption, and corruption is something that exists all over the world. It's not specific to China, but obviously it's something that one has to be extremely careful about. And there are a lot of companies that have got into a lot of trouble, both Chinese and foreign companies. And so it's something that one has to bear a lot of attention to, the fact that it's geographically far away and one is maybe relying on distributors and resellers. From a legal regulatory perspective all over the world, the laws mean that if you're relying on partners to distribute your product, you're actually legally liable if any corruption takes place, even if it's a third-party distributor that's doing it for you. So putting a lot of due diligence into selecting your partners, and then systems and processes in place to ensure that nothing happens which could lead to you and your partners and your business being impacted, be it in China or frankly worldwide. The US and Europe are extremely stringent about that. So that's one important aspect. A second one, of course, is just partnership. So in the B2B space, there is arguably even more of a need to put in place a number of different strategic partnerships to make one's business successful. And that leads to a comprehension of Chinese culture, but also just the sheer importance of the strategic partnerships means super important to invest in finding the right partners, the right fit, not just for the short term, but for the long term.
Yes, so for the B2B sectors, as you say, are actually quite similar in that way. But do you see any sectors that are easier to win in China compared to the other sectors?
Well, yes. So if you're a foreign company, again, I mean, a lot of this is sort of common sense, but if you're a foreign company, then again, it's about being competitive in a highly competitive market. So how can you find a niche, a market where you have a defendable position? And so a lot of that tends to be with intellectual property. So for example, your cruise liner example, that's a perfect example where if you just go in as a Chinese cruise liner, well, guess what? Any Chinese entrepreneur can do that too. And nowadays they have at least as much access to capital. They understand the market a lot better. There's no way you can win. So if you can enter a market where you have a definite competitive advantage to any Chinese business, then you have an advantage. So for example, if you're in education and you're providing a particular type of education, which is valuable because it's a foreign education, then of course you have an advantage. If you're selling a brand of biscuit and they're very popular because of the, I don't know, the Scottish heritage, then again, you have a competitive advantage. If you are selling a particular type of engineering product and you have very specific expertise and patents or perhaps just know-how around it, and perhaps a reputation that goes with it, maybe relationships within a particular supply chain, that's a competitive advantage. So it's really about trying to understand what is very special about my business, which is going to differentiate me from others. How do I protect and build on that? And how do I make sure that customers buy into it?
Yes, so these are all really useful takeaways, I think, for all of those companies who are looking to expand in China, is really to look at what advantage you have and sustainable advantage. Sometimes if you have an advantage for just less than, a year or a short period, by the time you actually get traction, it would be probably too late. So you need to look at advance as well.
So that's, sorry, go on.
So in terms of timing, timing to enter into China, now we're in almost middle of 2021. What's your comment on 2021 with the still travel restriction? Is this a good time to get into China or expand in China?
Well, I guess I would say this, but I think it's absolutely a perfect time to enter the Chinese market, or if you're already in the Chinese market, to think about how to accelerate the growth. Many reasons for that. The first one, of course, is that you mentioned COVID. Of course, China was the first country to be hit by COVID, but it's also the first country to be coming out of COVID. And so whilst we were in lockdown here in the UK, many of my colleagues in China were at last being able to go out, enjoy going to the restaurant, going shopping again, meeting friends and family. Right now, tourism in China is really booming. The economy is at record highs as people are able to enjoy going out again. So the first thing is, actually COVID means that whilst a lot of the rest of the world perhaps is tough, Asia, particularly China, it's a good time to refocus resources because that's where you're going to get a lot of growth. That's the first thing. Second thing is from a access to customer perspective, technology and the development of the country means that in theory, doing business in China has become easier rather than harder. So technology allowing channels to market. So for example, WeChat for consumers, or from a B2B perspective, for example, when you're looking to access particular customers on the customer end, fluency in English, level of education, understanding of the global market has changed dramatically over the last few decades. And you have a lot of returnee Chinese or Chinese that have studied abroad, speak fluent English, really understand foreign brands, really understand the value-added services of engineering firms or other types of companies that may be looking to sell into the Chinese market, but they also understand the local Chinese market. And so there's a real opportunity right now, which perhaps didn't exist before. And then finally, of course, a lot of markets that were more restricted to foreign investment are now being opened up, financial services, for example. And so, it's a very tough market. I'm not going to lie about that, but it's a fantastic time to be looking to grow.
That's great. Good to end on this part on a very positive note. So now we have received quite some more questions from the attendees in advance. So some of them you already covered, for example, mistakes that typically companies do, and also WeChat for the Chinese market. But one of the, I'll pick up a few to ask, and then the rest, if we don't have time to answer all of them, we can always do that afterwards. So someone's the specific question is very interesting to say, our potential customer in China, financial institutions, bracket, they are always expecting us to give things away for free. Is this normal?
Well, it depends what you mean by normal. I mean, clearly nobody wants to give anything for free. Normal, do Chinese businesses feel that it's normal to be offered something for free? I think I've got sort of different answers to that. The first layer of answer is, as a non-Chinese person who has spent most of my life learning Chinese and working in Asia and trying to better understand the region, my humble summary of Chinese people, and probably as a generality, hopefully not more, but about 50% of the time I'm probably wrong. I think the Chinese people are probably the most pragmatic people on earth. That's how I try and understand China. I think, okay, if I was super rational, what would I do? And that's generally what people do. So if you're super rational, why wouldn't you ask for something for free? Of course, I'm going to ask for it. And if you think about the history of China, 30, 40 years ago, China was not this huge economy that it is now. And I remember when I was first working in China, at that time, China had very little resources, it had no capital, it had very little intellectual property, and yet it was able to convince all of these multinationals to enter the market and to invest and to employ people. And how did they do it? They went around from company to company and said, look, we've got huge potential here. It's a huge population. It's going to be a massive market in the future. And we know that you want a share of it and we want to give you a share, but you need to show some dedication and some commitment. And your competitors are also interested in the market. So if you show some goodwill by, for example, building a free power station, or not free, but break-even power station, so you're not going to make any money on it, we're going to remember that. And next time we will consider you much more highly when we consider who to allocate power station projects to. And this was standard practice, and this has happened in a lot of markets. Now, if you were China, of course you would do that. You haven't got anything to offer. That's the only thing you can do, and they were very effective at it. And what happened, unfortunately, for the power developers is that people went around every single company saying the same thing. And so a whole bunch of power stations were built in China that were great for China, but for the people who developed it, they made no money off it. And so then, they came around and said, okay, well, now we've built that power station, can we start to do something on a more commercial term basis? Well, first of all, you had to wait till everybody else had done it. But then from a China perspective, sure, but then you've got to compete against the others. So what price can you offer? So on one hand, if you say, you know what, I'm not going to do anything for free, that's fine. And to a certain extent, you have to protect your brand. And if you start to discount prices, if you start to do things for free, you're destroying your position and the perceived value of what you're doing. On the other hand, relationships are super important. And from a Chinese perspective, I think businesses often want to see that you're committed for the long term. And so on one hand, they're trying to get, very rationally a good deal from you. On the other hand, they want to see how committed are you going to be trying to do some quick deals very quickly to make some money immediately, but in a few years' time, you'll be gone, or you are here for the long term, in which case you will be willing to do things for lower margins, and you're going to help me to build a business. And by me being successful, you're going to benefit from that as well. So as long as you're able to approach it from that perspective and either say, you know what, I'm in the sort of business where I don't need to do these sort of things, and I'm differentiated enough that I'm not going to, and you're still going to buy from me at a certain point, then don't do it. On the other hand, in many cases, it may make sense if you are committed to the long term to say, okay, fine, it's a bit of a cheeky ask, but I'm going to do it because I am going to show you that I am committed and I want to make you successful. And by making you successful, you're going to make me successful. And what would Chinese companies do? Generally, Chinese companies absolutely say yes, because Chinese companies are thinking long term, and also they're thinking volume over margin. Generally, most companies are thinking, I'm going to figure out how to make a profit later. Right now, I want market share, and that's all I want. And if I don't give you it for free now, you'll go with a competitor and I'll never have access to the market.
Yes, I think you're absolutely spot on this. And the reason I picked this question first is this is actually a very common approach that Chinese potential customers, whether they're financial institutions or big multinationals, you will sometimes be surprised. A huge Chinese company, it's not like they can't afford a small consulting fee or a small testing fee. It's just a general culture and practice that they would expect you to invest into that relationship. So they see that sort of free giveaway as a way for your commitment and for your investment in the relationship, gain that trust. But then once that relationship is there and trust is there, Chinese customers tend to be much loyal over the longer period of time as well. Doesn't mean they don't come back to negotiate with you all the time on pricing, but the relationship helps a lot. So another question, I think this is from a sort of a tech perspective, is are we going to see a more restrictive trade policy with respect to civilian technology export to China, like the dual use type of things? Have you seen that?
Well, so as you mentioned earlier on, I've been dealing with China and Asia for 30 years. Time flies. And I've been advising companies in that space for about 15 years. And generally, in terms of the Sino-foreign relationship and outlook, etc., I've tended to always be a little bit on the negative side. Maybe I'm a bit of a natural pessimist, I don't know. But pleasingly, I've generally been proven wrong. However, when it comes to the more recently, Sino-foreign relations, unfortunately, I think that the picture has been developing as I had predicted, which is, I think it's been getting worse and worse. And I think, unfortunately, it's, obviously it's, there are ups and downs, but the general trajectory for the next few years is probably a gradual deterioration, sadly, to do with a much bigger story. So, so from a technology perspective, yes, I suspect the situation is going to get worse. However, there's always a but, right? So it depends on the area and it depends who you are. So the relationships are particularly bad with the US. There's some separate issues, but of course related with Australia. Now, if you happen to be a British company or a European company, then arguably this can play to your advantage, because essentially there's a massive need for technology from a China perspective, and Europe, including the UK, is respected in terms of innovation. And so whilst things are difficult in the US, then there's even more attention on what can be done with partners in Europe and the UK. Now, of course, there's a different dynamic, which is Europe and the UK are also rethinking their relationship with China, which means that over time probably will make it harder for European and British companies to do business with China. But a lot of those restrictions are to do with what's happened with the countries outside China. From a China perspective, from a government perspective, there's a massive recognition that collaborating with foreign companies is absolutely key and important. And then from a personal perspective, Chinese business people, they love Western culture. They love working with foreign companies, regardless of all that happens in the newspapers. And it's just a question of how to navigate through some of these challenges.
Yeah, that's great. I think that particular questions now becoming more relevant to those companies that are previously not subject to export control. So I think we have other questions more or less covered. So now what I would like to do is just going back to share screen and to talk through a little bit about our other resources. Thank you very much, Ben. And let's just quickly share the screen to say, Ben has, together with us, Ben's company with us, we have developed quite some particular resources and services targeting helping the SMEs. So here on Crayfish website, you will be able to see later, we will put this playback there, but also the write-up. And we have the write-up from previous webinar as well. So you can come back and always get the latest insight. So just to say that Ben's team in China has worked with us on many projects, specifically for smaller company. All the companies are growing. What we are looking at is to standardize those services, whether it's marketing or strategy or sourcing, is so that you can save time in defining the scope and also back and forth proposals, so that you can get the best service, but at a much more favorite rate than if you would go to a boutique consultancy directly or go to a bigger consultancy. So for example, this one, I think Ben talked about distribution strategy. And for many companies, distribution in China, of course, not necessarily always physical products, could be software, but it's really important to get your strategy right. And for example, this is Ben helping us, we develop this product together, that we are able to look at various options of a strategy in terms of distribute your products in China. And then you will get a written report and everything is there for you to buy, just like e-commerce that you would do if you are buying a product on Amazon. So without further on that, I just want to say thank you very much again, Ben, and for everyone who attended. I hope you find this talk insightful, and do come to us if you have any thoughts, questions, and comments. And then we would like to see you in future webinars. And thank you again, Ben.
Thank you, Ting. Thanks everybody for joining.